everything you need to know about investing in the market in a 5 to 10 minute video. I hope you find massive value in this video. Again, we're going to be addressing everything you need to know about investing. What you need to do to set yourself up to achieve financial freedom, why time is your best asset, and why you should try not to necessarily try to time things or not time things. We're going to be diving into a multitude of data today. I hope you find value in it. Before we dive into this, make sure you smash the thumbs up button. Make sure to leave a comment down below and subscribe to the YouTube channel. Furthermore, let's dive into this right now. All right, brothers. So the first thing I want to address is we're going to be addressing how can you live off your investments and how can you retire from being an investor. So the equation that you're going to utilize for that is your yearly cost multiplied by 25. So your rent, your food, your travel, your fun, all of that combined, you're going to add that together and you're going to times that by 25. So for this example, we got $750,000 and that's invested at 4%. Now the average S&P 500, so the average equities market, roughly, it gets you about 7 to 8% return on investment a year. So if you put $1,000 in, roughly you get a 7% return on that. So that's just, a prime example right there. Now, the way you're going to do this for what return you're going to be getting is you're going to take 72. I don't know why it's 72, but it is. And you're going to divide that number by 7. So you're going to take 72 divided by the 7, which is your return on investment, 7. And that's how you're going to get it. So, for example, last year it was 28.6%. That's what the S&P 500 got. So you do 72 divided by 28.6. Now, a lot of people don't understand that time is really so important when you're investing, and it's all about being consistent no matter where the market is at. So if you follow Warren Buffett, he invested at a very young age, and he continued to invest. And if you started to notice, he started to accumulate and really get that compound effect, the 8th wonder of the world, once he started to get a little older. Now, there's going to be a couple of accounts we're going to address and why you need to set up these accounts. Some of them are your 401k, a Roth IRA, a mutual fund, and some others that we're going to be addressing. It's very imperative that if you're at a young age, right now is the time to learn and get invested in the marketplace, because time could be your best asset or your worst asset, as we always like to say at Brotherhood Finance. So the true cost of things, so let's say you have Amazon Prime, you would get the cost and you divide it by 0.04 compared to if you were to invest that money. So for this example, it would be $3,000. That's how much Amazon Prime would really cost you at the end of the day. So let's take another example. Okay, Brian, I understand, I need to invest. I understand that I shouldn't be spending my money on luxuries and stuff. I need to invest more in assets. That way, eventually, you can earn your money, keep your money, and multiply your money. And that way, you can live off your passive income, because passive income is the least taxed compared to earned as the most taxed. That's why it's so imperative to start at a young age, and that's why we preach it so much at Brotherhood Finance. All right, so let's do an example of 3 people. So if you have 3 people and they put $200 in a month, this is what their accounts would look like. So, first off, you have terrible timing Tiffany. So every single time, 1987, 1990, 2000, dot-com bubble, the recession, and then 2020, every single time she bought at a terrible time. Let's see where she would end up with after 40 years. She would end with $773,358. So that's still a considerable ROI, even though she had terrible timing. So right here you have Brittany Market Bottom. So she is a perfect timer of the market. She buys every single crash, she waits, she holds on to cash, and she waits until the market and the equities market tanks, until we slip into recessions. As we also like to preach at Brotherhood Finance, a mindset is one of the most important things to have as an entrepreneur or as an investor, because you need to be greedy when others are fearful and fearful when others are greedy. What I mean by that is you want to buy at the bottoms when everybody's talking about, when everybody's in pain. You don't want to buy at the top when you have that FOMO, that fear of missing out. You want to buy the asset when it's down. That way, when it goes back up, you get the highest ROI. Okay, so here's Brittany Market Bottom. She perfectly times it. She gets a ROI of $1,123,573,000. So that's hers. Now, if you look at Steady Sarah, $200 a month, as we mentioned before, still slow and steady wins the race. You don't need to try to time anything. She's actually going to retire with a considerable $1.62 million. Okay, so as we can see from these 3 people, It doesn't matter if you time the market badly or good. It's just about being consistent over time. And that's why right now, if you are in your 20s or you're just graduated high school, you're in college, it's imperative that you set yourself up with the financial education. That way you can get, the most important years and invest at such a young age. With that being said, how do you retire a lot quicker? What are some things that you can do? You understand the concept of investing, why it's so imperative to do it at a young age. We're going to be addressing the accounts that you can set up. How do I actually get to that point? How do I retire quicker rather than 40 years? Now again, those were only at a 7% ROI, or a 4%. Now if you change that to about a 12%, 14% return on your investment, you're looking at a multitude of millions of dollars. Just from investing around $200,000, you could turn that into about $5.5 million with a Roth IRA over time if you're in your 20s. So the most important years to start are right now. Okay, so how can you actually quicken your length to retirement? So after-tax income, if you can keep 50% of your after-tax income and instead invest that into an asset vehicle, is how you'll ensure that you can retire quicker. Now, the 3 accounts we're going to be talking about is a Roth IRA, which you can only contribute up to $5,500 or $6,000 depending on your age per year. Now, how a Roth works is you're gonna pay taxes going in. So when you pull your money out, you won't have to pay taxes. As we know, taxation is one of the largest expenses. So with the Roth, when you put your money in, when you pull it out, that's when you don't pay taxes. Now I recommend you figure out how to manage your own accounts. You don't need to go buy all these courses. You don't need to do all that. You need to develop the right mindset and framework and choose a couple of solid equities that you can invest in over time. That way Wall Street's not using your money and you can invest your money yourself and use compound interest. So that's the Roth IRA. The other one is a 401k. This one's typically through an employer or someone that you work with. So for my job, for example, I put in 7.5% and they match me 3.5%, and that just takes it out of my paycheck. Now with a 401k, I'm not paying taxes. I'm paying taxes when I pull the money out, so I'll actually get less. That's why I personally prefer a Roth IRA over a 401k. Then the other one is an HSA. So if you found value in this video, please make sure to smash the thumbs up button. It's very imperative that you do so. And if you had not had the opportunity to, please check us out on our videos. We just posted how to prepare for this recession that's coming. Some of my top penny stocks that I really love. If we're entering a market crash, and start to understand what's going on in crypto, really start to develop that mindset, because I believe crypto is the future, and after we have this recession or whatever it may occur, I think that's when crypto is really going to take over in the coming decades. So if you found value in this, again, it's better to have time in the market than trying to time the market. Investing at a young age, you can set up a 401k, an HSA, or a Roth IRA, and some other accounts. I like Fidelity. If you want some more information on that, check out some of our YouTube videos. We go over all that content. Again, I appreciate you watching this far through the video. If you've not already done so, make sure to smash the thumbs up button. Smashing is very imperative. Make sure to leave a like. Make sure to check us out on our other social medias and TikTok and others, etc. And check us out at brotherhoodfinance.com. It means a lot. I appreciate you. Have a good rest of your day. Have a good rest of your weekend. I appreciate much love. Peace.